Hello, everyone. Thanks for joining us on this Wednesday, and welcome to this rebroadcast of a presentation I did a few weeks ago, or last week, actually. And we had such a outpouring of people wanting to see it again or ask questions live over or via the presentation that we are rebroadcasting our introduction to our new tool, which I'm very excited about, which is the Primo Oscillator. This is a brand new feature we have. You'll only find it on the PTS Primo charting platform, and we're really excited about it because we're going to have the inaugural launch in just the next couple of weeks. And so we're setting up for a private class for beginning students, and we'll show you different ways in which to apply it. Now, a lot of people have been asking, well, Steve, you usually just teach strategies and methods for trading. Why are you focusing now on an indicator or a particular type of tool? Well, it's always been my pet peeve that many of the tools or things that we've been taught that are supposed to have high levels of consistency, and things that I was actually taught some 4 decades ago, actually don't work that well. In fact, their levels of consistency is really, really poor. For example, let's take a look and talk about the problem with most oscillators. And this is my problem as well when I first started trading. As we look here at this chart of the spiders, that's the ETF that represents the S&P 500. We see here that it had a really nice upward move and then followed by a downward move, which gave away nearly all of the gains there. All right. Now we have plotted on the bottom the standard stochastic oscillator, very popular tool. Most people use it or have used it in the past. And what this tool usually comes equipped with are 2 benchmarks, the upper benchmark here and the lower benchmark. Okay. Now the blue line is the actual oscillator itself. Now, conventional wisdom tells us when applying this tool that when the oscillator crosses above that upper threshold, well, this is when price is deemed to be overbought, meaning that it's a little stretched too thin to the upside. And this is where you should look if you have a position or if you're long either the spiders or some stock that makes up the S&P 500, you should strongly consider exiting because we're overextended. The rubber band has been stretched too far, and most likely this is where we're getting near some type of short-term top. All right. So if we had followed that suggestion, how well would that have helped us if we sold or exited our position? If we sold and went short, well, we would have lost a lot of money. And if we exited our position right when we went into the so-called overbought area right here, well, we would have left a lot of profits on the table, right? So let's just say we rack that one up to a loss or one up to not making so much money, and we're still following and using this tool, and we see that the oscillator now has crossed back into the neutral zone. But at this point right here, it now crosses below the lower threshold. So what does that mean? Well, most oscillators, this one included, will tell you that that means we are now in the so-called oversold area. Okay, so we've crossed below that lower line, which tells us now price is oversold, meaning it's stretched too much to the downside. So this means if you were looking to buy, this is an opportune place to look to buy because price is a little bit too low. All right, it's oversold. And if you were thinking of holding on to a position, that's a good idea. You may want to pick up some more shares. Maybe you actually are trading the spiders, the ETF that represents the S&P 500, because now most likely there's going to be a bottom made. Okay, well, let's see how price reacted to that. Okay, how well would you have done if you had taken the advice of this oscillator and started to buy in the so-called oversold area? Or how well would you have done if you held on to a position and thinking that we were oversold and it's about ready to bounce, and you held on and continued to see it going lower and lower? This is the problem with most oscillators. Not saying that they don't work every once in a while, but as I've often said in the past, it's similar to the slot machines in Las Vegas. In other words, they are designed to give you a win every once in a while, to make you feel good about yourself and think that you're on the right track. But overall, if you stay there long enough and use the slot machines, you're going to give all your money back. They're designed to do that. It's the same way with traditional wisdom indicators, and in this case, oscillators. Every once in a while, you will have a fantastic bottom or top being made, and you'll think to yourself, wow, this is amazing. I'm going to clean up and make a killing here, and I'll be able to retire in a couple of months. But then you stay there long enough, continue to apply these worn, outdated tools that have no levels of consistency, and most likely you'll end up giving it all back. So this is why Pro Trader Strategies and myself focused on oscillators. And we came up with something entirely different that is really innovative. And you'll see that the results are, in my opinion, much more consistent than using the standard oscillator. For example, if we clear away what the standard oscillator is supposed to do, what would you have done if I told you that using this new tool right here at this point, the Primo oscillator was telling you that there was a short-term price directional change, most likely to the upside. Okay, and as you can see, it worked out very well. Now, since price has an upward direction at this point, right here, it signaled that there was a short-term directional change. Now, if the direction had been going up, then obviously the direction change most likely has been going lower. And 2 days before the top, we see that ultimately it started to go lower. Now, I want you to pay attention. This is how sensitive this new tool is, because as price went lower, look what happened here. We had 2 days to the upside. Now, before we knew that they were going much lower, a lot of people say, well, listen, all we did was come down. We filled this gap right here. And now we're going to go right back up and make new highs. But on the close of this second update, the Primo oscillator once again deemed that there was a short-term price directional change. So if we have been going up for the last 2 days, now the direction was going to change. And as you can see, we went even lower. So this is what we're excited about. It's taken a long time. We apologize for the wait. We had many problems with the programming and putting it together, but we're happy now to introduce the Primo oscillator, a brand new tool I'm very excited about. And we've been testing for months, and we're really excited about the results we're seeing. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading now for a total of 45 years. I started my career on the floor of the Pacific Stock Exchange, where I was a specialist for 9 years. I was actually on the floor for 16 years, but 9 of those years I was a specialist. Specialist is just simply someone who specialized in making markets, roughly in about 50 or 60 stocks. So that's what I did during the crash of '87 and the bull market that followed. Now, I've made no secret about this. When I first started trading, I struggled tremendously. In fact, I've often said my first 2 years there, I didn't make a dime, and I actually thought I wasn't going to be on the floor much longer. One of the main things that my mentors taught me that actually turned my trading around and were able to get me back on that road to consistency was this great truth in trading, and that is you have to make your own trading decisions. You see, most traders, myself included, are taught that you have to follow some guru on TV, or we didn't have the internet then, but we had newsletters, and you have to follow whatever they're saying, or you have to pay for some signal service that tells you what they like to buy or sell. Or you have to go to a chat room or a trade room and find out what everyone else is buying or selling. This is the way most traders are taught to trade. We're taught that this is the way you become successful. But what my mentors taught me was the exact opposite. They said, Steve, that's what leads to most traders' failures, is because when you do that, you're taking yourself out of the game. Wouldn't it be silly if you were flying from New York to LA and you heard the pilot come over the intercom and say, hey, listen, what does everyone think about the way I should land? Do you think I should land this way, or should I land this way? Or what are your suggestions? You'd want to get off, say, wait a minute, let's land right now. I don't want this pilot in charge of the plane. But this is the way traders trade every day and make their decisions. They go to chat rooms or trading rooms, or they ask their friend, or they go to webinars and ask the guy in the webinar, what do you think of this stock? What do you think I should do? What do you think it's going to do? Okay, what's the best time frame? This is what leads you to failure, and myself included. This is the way I was taught. And there are so many things that we're taught that really don't work. And so that's why, but roughly about 13 years ago, I teamed up with Pro Trader Strategies, and we formulated Specialist Trading so that we teach you all the things I've accumulated in over 4 decades, all the tips, techniques, strategies, methods, and indicators that actually have high levels of consistency to help you make your own trading decision. You see, in my 45 years, the only traders I know who are still trading in that amount of time are the ones that make their own trading decisions. None of these traders who are still trading go to a chat room or a trading room to find out what they think they should do. None of them, like myself, listen to news. We don't care about the news. It doesn't matter. None of them will watch TV after the market closes to find out what someone thinks of the market. They have a plan, a simple plan in place that they trust and that has a high level of consistency, and they simply apply it according to their own means. This is where I want to get all of my students around the world to get to that point where you can just look at a chart, have a clear-cut idea, and know in your heart what you think is going to happen after things that you've researched and studied that we've provided you with, and make your own decisions. That's how you become a consistent trader, not by going to a webinar and having someone tell you, well, the market's going to do this today. It's going to go back up, or it's going to go back down, or this is the perfect stock to trade, or this is the perfect time frame to trade. Those are all things you must decide for yourself. But once you do, you'll get onto that road to consistency. Now, before we begin today's presentation, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. Also, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down. I post different snapshots every day, signals that our strategies have generated, or little bits of financial wisdom as well. Lots of free education on a daily basis, so please feel free to follow us on Twitter. So, as I stated earlier, we are a little bit different from other companies in that our only purpose, our only direction is simply to educate you. We're not going to tell you what we think the market's going to do. We're not going to tell you because we don't know. We're simply applying our tools and then following whatever the market does. You see, a good trader follows and listens to the market. He doesn't determine and say, well, we're going to top out here, or this is where we'll bottom out, or this is what's going to happen once the news comes out. A good trader just simply follows it like a river and just says, listen, if the river wants to go this way, I'm going with it. If it wants to go the other way, then I'm going with it. You never try to buck the trend. So therefore, our philosophy is simply to teach you how to trade with the specialist edge. Now, when I struggled tremendously 4 decades ago, I asked the same thing of my mentors. I said, why can't you guys just tell me what you're buying and selling, and I'll just piggyback and do the same thing you're doing? And they told me the exact same things, because they said, listen, a good mentor does not trade for you. You have to find out and make your own decisions. And at the time, I hated hearing that. I said, why don't you just let me do what you're doing? You guys are successful. Because ultimately, you won't be successful until you make your own trading decisions, okay? Even if someone is making a ton of money doing what they like, it doesn't mean that you'll feel comfortable following their choices. You know, they may trade 100 times a day. I know personally, I couldn't trade 100 times a day. And there are other traders that only want to trade once a month. So it doesn't matter if someone's successful. Their risk parameters or the style in which they trade may not fit your persona. So you have to find your own way, okay? I'm happy to say that, once again, we have students in over 116 countries, and in every state in the United States, they're finding their own way through our methods and teaching. Now, before we begin, just a few announcements. This is going to be recorded, so please, if you're having technical issues or if you have to leave early, don't worry. We will provide you with a link to this recording. Also, ask me questions, but please wait till the very end. I don't want to stop for each slide and answer a question, because oftentimes your question is answered at the very next slide. So I don't want to take a lot of your Wednesday morning. So let's kind of write down and try to remember any question you may have, and I promise I will get to it at the very end, okay? And I'll tell you about a special offer we have for a select and almost a VIP type of class for new members with this oscillator. All right, with that stated then, let's begin today's educational presentation. Now, we're going to be talking about our new tool, but for those of you who aren't familiar with it, what exactly is the new oscillator based on? Okay, since it's going to be different from most oscillators you've ever used and applied, well, then what's it based on? Well, let's define, first of all, what your standard oscillator is, okay? This is the way most oscillators are built on. This is their format. Most standard oscillators measure the amount that a security's price has changed over a given period of time. So basically, what they're looking for is a closing price of a security, and then they measure it based on the parameters of the oscillator to come up with a plot, to come up with the last digit, okay? And that's the standard definition of the way most oscillators are based on. And each one has a different format, different requirements, but pretty much the same basic premise. So how does the Primo oscillator differ from that? Well, here's our definition. The Primo oscillator measures the amount that a security's price pattern has changed over a given period of time. You see, we're not just looking for the closing price and then going through requirements and coming up with a plot of the oscillator. We're looking for a specific pattern that is within the price. And then what we're doing is measuring how many times and where exactly that pattern has occurred over a given period of time. It's entirely different from the way most oscillators are based. And that's why I think we've come up with something entirely new and very innovative that gives you very, very consistent results. So what are the advantages then to using this new oscillator based on different parameters? Well, firstly, It shines the light on high probability short-term price turning points. Remember, it's not designed to pick a top or a bottom the way other oscillators are. Doesn't have anything that's overbought or oversold, and you'll see that in a few minutes in some examples I share with you. It's just highlighting or placing a spotlight on these high probability short-term price turning points, and they can greatly help you though. Let me explain why. It also provides you with numerous trading techniques that are based on the oscillator's independent fluctuations. Now, I'm going to be teaching a class just to a select few that are the beginning new members of this oscillator course, where I will go over roughly about 4 different techniques based on the oscillator's fluctuations. In fact, I'm going to share with you just one of them today, okay? But there are different ways to trade it, and that's the beauty of this, because we're using it basically just off of the oscillator's fluctuations. Now, the main advantage to using the Primo oscillator is what we talked about earlier. It's just one more piece of the puzzle that enables you to make your own trading decisions. For example, let's say you're thinking about purchasing a stock, but you're not sure of what the market's going to do. You feel uncomfortable. Maybe you've had a few losses in the past. So you become a student of mine in the Primo Oscillator course, and you learn how to use it. So you like this stock, and you look at the Primo oscillator, nothing has happened yet, but the next day the Primo oscillator deems that most likely there's going to be a short-term directional change. Now, so far, the stock has been slowly going higher, but if there's a directional change, most likely it's going to go lower. So maybe you want to wait off on buying that. Now, what if the directional change was to the opposite side, to the upside? What if the stock had been slowly going lower and it generates a short-term directional change at the bottom or towards the lows? Well, that would give you the confidence then to buy, because most likely the change is going to be to the upside. This is how it can really help you. Or let's say you are long a stock and you just have a tremendous profit and you're thinking, boy, what do I do with this now? This is, I've got so much money here. Do I sell it? But every day I think of that, it keeps going higher and higher. Well, then one day the oscillator, using this specific technique, well, I'll share with you today, generates a short-term price direction change. Now, if we've been going higher and you see that most likely that change is happening, well, most likely it'll be to the downside. So this can help you determine and make a choice as to where you want to exit. Maybe you'll exit a portion of your position, maybe you'll exit everything, or maybe you'll just move your stop very tight so that if it does change to the downside, at least you'll lock in a lot of profits. Once again, everything we teach, all of our methods for trying to train you are based on helping you or enabling you to make your own trading decisions. That's where the Primo oscillator really comes in handy, because it can really help you with whatever decision you've already made or thinking about making. All right, so let me ask you a question. Which oscillator would you rather apply to your trading? Let's look at a couple examples here. Now let's go back to that chart and the spiders. Remember, we have the standard stochastic oscillator plotted here on the PTS Primo charting platform. This is the way it looks, and if we used it in the most conventional way, we really would have lost a lot of money. If it was overbought here and we decided to sell or get out of our position, we either would have lost a lot of money or left a lot of money on the table. And then when it got down to the so-called oversold area and we decided to buy or to hold on to our already existing position, well, we would have continued to lose a lot of money. So therefore, we have huge losses on our portfolio, all right? Let's see how the Primo oscillator could have helped us looking at the exact same chart. So on the PTS Primo charting platform now, we're comparing what we just saw, to the new Primo oscillator. All right, here's the Primo oscillator on the bottom of the chart. Here's that same chart of the spiders, okay? Now, the oscillator once again is in blue. We have an upper threshold and a lower threshold. Now, this is just one of the techniques I'm going to be teaching in the course. Now, let's follow the oscillator right here. And here it closed right below the lower threshold. So what is that telling us? That's telling us that most likely there's going to be a directional change in price. And that coincided with right here, okay? Now, the price had been going sideways to lower. So obviously, if there's a directional change, it would most likely be to the upside. So you could have made a decision. Well, I was thinking about going long, or maybe you already are long, you're thinking about selling, but this can help you make your decision, maybe not to sell, or maybe just to move your stop up closer, because look at this, okay? Where the stochastic was telling you that we're in totally overbought area, the Primo oscillator was telling you the exact opposite, that there was a trend direction change. Now, as we went higher and higher, we're following the oscillator. Nothing has happened using this first technique until this point right here. Look what happened. The oscillator closed now above the upper threshold. So is this telling us it's overbought? Is this telling us a top is being made? Absolutely not. That's not the job of the Primo oscillator. All it is telling you a short-term price direction change. That's all this indicator does. It can change for a couple of days, maybe a couple of weeks, maybe a year, but it's just telling you right now that most likely it's going to change direction. And that coincided with this bar right here, okay? So if you were long, or if you were thinking about getting long, right now you could say to yourself, well, you know what? If I'm long, maybe I'll sell a portion of my position, maybe I'll raise my stop, or maybe I shouldn't get long right now. Maybe, you know, that guy in that chat room, I shouldn't listen to him. He says the market's going to explode to the upside. It hasn't even started yet. Maybe I'll hold off a little bit. And that would have been a wise decision, because look what happened. 2 days later, price started to fall out of bed. So that's why we say this is not a topping tool. This does not tell you the exact top of the market. Now, sometimes it will, but that's not what it's designed for. It's just to give you a heads up. It's to highlight these areas where most likely a short-term price directional change is about to take place. Now, look right here. We went down for about a week, and at this point, we started to bounce up. If we didn't know that we had gone lower, we would have thought, hey, we're starting to come back up again. Look, we have a bullish engulfing pattern right here. We're starting to go up. We filled the gap, and we just retraced roughly a nice Fibonacci level. So, hey, that guy in that on that TV program I watched after said we're going to go straight up. But look what happened again. The oscillator once again closed above the upper threshold. Now you notice this isn't picking a top. We've already come down lower. It's just telling you that it's already identified a price directional change. So even if we're going up for 1 or 2 days, it's saying that direction of the price is going to change. And look what happened after that. So you see how valuable this is as compared to your standard stochastic, which I would venture to say the majority of traders have used or are continue to use on a daily basis. This is how this tool can really help you. It's much more fine-tuned, and it's a lot simpler. Plus, it really has different ways of applying. And I'll share with you those in the course. There's that extra price change that happened as we were going lower. Okay, so now that you understand the process behind the oscillator and what it's based on and what the the fundamentals are of it, let's show you some more examples. Okay, and now I'm sorry, I cannot show you all the examples. We have some amazing examples that I wanted to take actually snapshots of and show you, but unfortunately then I would be giving away what I'm going to be teaching to the select few in the course. So let's just stick with this one technique, which is the most basic technique, which is applying the oscillator and looking for it to close either above or below those standard thresholds. Okay, all right, so let's take a look at CRWD, CrowdStrike. Now this is once again using the standard stochastic oscillator, overbought area and oversold area. Okay, so as we look at the price, we see that the oscillator was coming down, and it's hard to see right here, but right here at this very level, it actually did close just a little bit below the lower threshold. So what's it telling us? The standard stochastic oscillator is telling us that for that one moment in time, we are now oversold and you should buy it. So if we look at the corresponding bar above it, we see it right here. Okay, so we should buy this. And for a couple of days, that was a really nice little setup, okay? But you would have had to been quick. You would have had to have some exit strategy. You would have had to have some type of tracking system so that you didn't, turn a winning trade into a loss, because look what immediately happened after that, okay? Now, as the oscillator went up, now it went all the way down and then went back down once again into the so-called oversold area, and it was telling you once again to buy, and look what happened. It still didn't go up, okay? So which would you have rather traded with this particular stock, the stochastic or the Primo oscillator? Here's the exact same chart, but we have the Primo oscillator applied now, okay? And we're using that type 1 technique where we just have the upper and the lower threshold. So with this technique, the oscillator is not telling us anything until right here. It closed above the upper threshold, telling us that most likely there's a directional change in price. So which direction had price been going preceding to that? It had been going up. So therefore, at this point right here on this bar, it's telling us that most likely the direction will change. And look what happened after that. So we didn't have to buy for a couple of days and hold on to our position and see it turn into a loss. All we did was take advantage of this large trend change. Let's look at this example now in KLIC. This is using the MACD, another very popular tool. I'm not going to tell you that it doesn't work sometimes. I've used this in the past when I was first starting and had some phenomenal results. But just like every one of these old traditional indicators, it also gave me some tremendous losses as well. So over time, I really didn't have anything or a lot to show for using these. There's no real consistency. Now, using the MACD, we see here 2 lines. All right, there's no overbought, oversold thresholds. It's just 2 lines. And the way this works is the red or pinkish line is the actual MACD oscillator. The blue line is what they call the signal line. So here's the way this works. When the MACD goes above the signal line, that's usually deemed as some type of buy area, okay? Because price has gone above or the oscillator has gone above. So if we apply that right here, that's telling us that right here at this bar, we should be looking to buy. Now, how well did that work, okay? We actually bought just a bar or 2 away from the top of this short-term range. And look how well that would have turned out in the following week. Now, the oscillator turned around and eventually went below the signal line, telling us that we should sell right here on this bar and go short if we're more aggressive, or at least be out of the market. And that would have helped us for the next week or so. That was a pretty good suggestion. So maybe we made back what we lost. And let's say we were more aggressive when we actually got short. Well, once again, you would have had to be quick, because look what happened. The MACD at this point crossed above, telling you to go long. And you would have had to take a loss if you'd gone short back here. You had to cover up here. And I don't know if you would have had enough money left to take advantage of this nice run. So it had a nice winning setup, the last part of this chart, but the very first 2 setups were losses. So on balance, you probably would not have made much. And if after those first 2 losses, you may have said to yourself, you know what, I'm running out of money. I don't want to take another loss. I'm not going to take this next setup. And most likely that's always the one that works, right? So this is not a consistent way to trade. Let's apply the same chart with the Primo oscillator, as we see here. We're going to use that same technique with the upper and lower thresholds. Okay, so the oscillator is kind of moving in the neutral zone, and then right here, it told us that most likely there is a directional change in price. So if we look at the corresponding bar, we see that price had been heading lower. So which direction most likely is it going to go? It's going to change and go up. And as you can see, you could have taken advantage of this nice swing up. You would not have had 2 losing setups in the beginning. You could have taken advantage of that initial move. Here's an example in the QQQs, okay, using the MACD once again, all right? We see the MACD in pink here, or magenta, crosses above, giving you a buy signal right here at this point. If we look at the corresponding bar, well, we would have been buying right at the top, because what happened in the following week? Went straight down. So once again, not a very good trade using the MACD. Well, the MACD tried to redeem itself, so it went below the signal line, and now it's telling us, well, exit that long position, time to go short, based off of this bar right here. So you would have had a loss, and you would have went short. For the first 2 or 3 days, you're thinking, oh, that's pretty good. I'm making back what I lost. But once again, you would have had to have been very quick, because price quickly reversed and went to the upside. At this point, the oscillator crossed back up above, and now it's telling you, wait a minute, don't be short after all, get long. So now you are covering your loss, and now you've created another loss. You have 2 losses along with a small win here. Not a very consistent way to trade. Let's see how the Primo oscillator could have helped that, okay? Now, the Primo oscillator, once again, is not meant to be 100% foolproof. Let me show you what would have happened with that same chart. Right here, we have that same setup where the oscillator goes below, telling you that there's a short-term price directional change right here. So you could have purchased right here based off this bar, or on the next one if you wanted confirmation, but that would have been short-lived, because it went up. Sure, it went up, but for a very short time. So you would have had to protect yourself. So this is what we mean by saying nothing works 100% of the time, where you're going to get this nice extended run for 2 to 3 weeks of going in your direction. You still have to be quick, but these are short-term price directional changes, remember. So look what happened after that. Then it went straight down. So if you didn't protect yourself and place your stop unchanged, you had a loss, that's true. But we teach you different ways in the course, and plus I'll show you a added feature in our course, which will help you with these stop placements. But right here, once again, we crossed over below the lower threshold, right at this corresponding bar, and you could have taken advantage of the nice trending up move that ensued after that. So you see, a lot easier and more simplistic way to trade without getting whipsawed so much when you use the Primo oscillator. Let's look at a weekly chart of Netflix, because we know that we have a lot of traders, a lot of students who are not just short-term traders, but they're investors. They like to swing trade or hold on for longer time periods. Well, as we look at a weekly chart of Netflix here with the standard stochastic applied, how would this have helped us? Once again, here's the overbought threshold and the oversold threshold. When price closed below the oversold threshold, this is where you should be buying, right? Or looking to buy Netflix on a weekly time frame. So what if you were investing at the beginning of the year in Netflix? Well, you would have purchased Netflix around 600 for your long-term portfolio, right? And how well would that have helped you in the following weeks? Okay, the stock lost half its value in the first quarter of this year. Now, as the oscillator left, you start to think to yourself, well, maybe it's making a base here. I'll hold on to my position. And then look what happens again. It goes into the so-called oversold area. So you say to yourself, well, I'll buy some more because now it's really oversold. And how would that have helped you? Now it's down in the 200s, okay? Remember, you would have purchased at 600. So really no consistency here on a weekly time frame. Now, as the oscillator left the so-called oversold area, it went straight up and went into the so-called overbought area. So now you're saying to yourself, wow, so now I'm supposed to get out of this? Wow, I wish it would have told me to get out of it up here, but now I'm supposed to get out of it over here. So, okay, so you sell, you take a huge loss, and look what happens. This is where the stock continues to go higher, okay? Let's look at the Primo oscillator as applied to Netflix, using only this one technique, okay? Now, it didn't really give us much of an idea here in the beginning. So while the market was going lower, basically, the oscillator is telling you to be out of the market at all. So you wouldn't have lost anything. But at this point right here, this past June, on a weekly time frame, look what happened. We closed below the lower threshold, telling us that most likely there's going to be a directional change. Now, looking back, even on a weekly time frame, what was the previous direction? We had been going lower, right? So most likely, with this corresponding bar, and with this one right here, the trend change is going to be to the upside. And you could have potentially captured 125 points. You would never have bought here, and you would have looked right here at this point to buy or to go long, or here as well. Let's look at a weekly chart of Sam, the Boston Beer Company, okay? Obviously, this had been going up for a while and then headed much lower, okay? How could the stochastics have helped us? Well, right here, the stochastics went above the upper threshold, telling you that we were overbought, okay? And it continued to go higher. Had you sold right here, you would have had to wait a good month or two before it started to kick in, all right? And that would have been very difficult if you didn't know certain ways in which to protect yourself. Now, at this point, guess what? It's telling you that we're oversold. So now you should be looking to buy. Now, how well would that have helped you if you started buying right here, roughly when the stock was trading around 1,000? You lost 50% of its value all the way here towards the end of the chart. So two rather inconsistent ways to trade using the standard stochastic. Let's apply the Primo oscillator and show you how consistent it can be. Now, when we say consistent, I always say this in my webinars, consistent is not the definition of always having winners. So a lot of traders say, well, Steve, you said this was consistent. I thought that every trade was going to be a winner. No, consistency means an awareness that you will have losses or that it won't work out as well each time. But knowing that oftentimes on the next setup, you're able to recoup those losses. That's what consistency means. In other words, when let's say a basketball player is called a very consistent shooter, that doesn't mean that he makes a basket every time he shoots. Or let's say an actress is a very consistent actress. That doesn't mean that every movie she's in is a box office hit. It just means that it's a two-step forward, one-step back process. Every once in a while, you have a winner, followed by a loser, then followed by 2 or 3 winners, followed by 1 loser. And let me share with you how that can be applied with the Primo oscillator. As we look at the exact same chart, once again, SAM, and using that one technique, remember there are 3 other techniques, possibly 4. Here's the upper threshold. Right here at the very same place that the stochastic oscillator generated, it was telling you that there's most likely going to be a trend directional change, okay? Now, the trend direction had been going higher, so we thought that it was going to be going lower, and for roughly about 4 or 5 weeks, it went against us. Now, if you just basically traded this binary saying that, well, I'll just sell at the market, this would have turned into a losing trade. But in the course, I will teach you a specific technique that actually is more conservative, that wouldn't have had you entering until this bar right here. And you would have gotten short just 1 bar off the top. And you could have taken advantage of this nearly 800 point move to the downside, because that was the only setup that this particular technique, the Primo Oscillator, generated. Okay, so there's lots to learn in our VIP class that's coming up. Now, the previous examples revealed that I just shared with you are just one of the multiple ways in which to apply the Primo Oscillator to your trading. Okay, like I said, I can't share with you all of them because I just don't want to give away everything and turn this into a free webinar. And people say, well, oh, I know exactly what to do now. I want to teach you and really go into detail how to apply these different techniques in the special class we're going to be giving. Now, in terms of the display, I just want to share with you, we worked a lot on this to make it easier for it and to make your display of the Primo Oscillator fit your style, because that, once again, will help in making you a consistent trader. When you feel comfortable with a tool and you're easy, it's easy enough to see and easy enough to apply, well, then it will help you even more. For example, this is the standard way in which applying the oscillator by using the line, okay? The way most oscillators have it. But we also designed a way where you can apply it with histogram. So you can use it this way as well, okay? You can also use both together. If you'd like to use the line along with the histogram, you can use both of those together, all right? Now, you have the capability to apply your own upper lower thresholds or even zero lines if you'd like. You can do this with the histogram or you can do it with a line. It makes no difference. In terms of the size, you can also apply indicators like moving average, okay? Here's a simple moving average applied, and there's one technique that I will be teaching that uses a moving average to help you make your decisions. It's a great technique, and you'll see that in the class as well. Now, in terms of how it's displayed, you can increase the size of the window to make it larger or smaller. It's up to you. Or if you like, we were finding when we were back testing this and beta testing it, many of the people at Pro Trader Strategies and myself would just look at the oscillator, and we would just look at it to tell us exactly if the market was giving us some type of setup or short-term directional change. So there's different ways to use it, different ways to apply. Okay, as we come near the close of this presentation, let's review what I shared with you. The advantages to trading with the Primo Oscillator are simply this. It identifies these high probability short-term price turning points, okay? I'm not going to sit here and tell you, oh, it picks the top and it picks the bottom. No, it doesn't do that. Or I'm not going to tell you and say, oh yeah, it tells you when something's overbought or when something's oversold. No, that's not the job of the Primo Oscillator. It's different from those other oscillators you've been using. You've all seen how inconsistent they are. The job is just simply to identify short-term price directional changes. That's what its purpose is. Now, it can be applied to fine-tune your entries or exits. Remember, it will help you in deciding whether you want to enter or whether you want to exit. As we often say, the choice is yours. You're in charge of your own trading. You're in charge of your trading destiny. And this is one more piece of the puzzle to help you make those decisions. Now, on top of that, I will teach in the course multiple trading opportunities based on the oscillator fluctuations, not based on the stock that you're trading, based on the fluctuation of the oscillator. Now, it really increases the consistency, not only for intermediate traders, like just looking at a daily chart, but also for investors looking at weekly or even monthly charts. It can really help you that much. But most importantly, it enables you to make your own trading decisions. Remember, this is the philosophy behind everything we teach and do at Specialist Trading and Pro Trader Strategies. We're trying to enable you with all these tools, these strategies, these methods, so that you can take charge. You can make your own trading decisions. Remember, just like the airline pilot or just like a brain surgeon, you would never imagine a brain surgeon asking people in the operating room, how do you think I should operate? What do you think I should do here? Is this a good decision? But traders do this on a daily basis. They're always asking or going somewhere to a trading room or a chat room or on TV to find out what they should do next. Well, the only way you'll become a consistent trader is by making your own trading decisions. The good news is we developed all these techniques and methods to help you make those choices. Now, let me tell you about special offer, because this is coming very soon to what will be when we'll be closing up the class. This is the Primo Oscillator Special. We want you to be one of the first to trade with my new special feature, okay? This is unlike any oscillator you've ever traded before. It's totally built on different parameters. It identifies these high probability price trading points based on patterns of price. It's not based on where a price closes for the day, and then we measure it opposed to other format or other requirements and then come up with a plot. It's based on a pattern and the measurement of that pattern and how often it repeats itself, okay? Also, you're gonna get a lot of more trading techniques. You can combine this with your own strategy, and we encourage you to do that. But here's one of the best things, okay? Everything you saw today was on our platform. Everything you saw was displayed using the PTS Primo charting platform. We're gonna throw in 3 extra bonuses. Here's the first one. As you saw, using the platform, you saw how simple it was to apply. So be one of the first to trade the Primo Oscillator on our platform. We're going to share with you a full year free of the platform. So that's already included. There's absolutely nothing you have to do other than sign up for the course, and you're going to get a full year of the platform itself. Okay, it comes with a host of other different tools and indicators so that you'll be able to trade with. All right, that's bonus number 1. Bonus number 2 and number 3 are really special because these are 2 other complete courses. These are 2 other courses that I actually gave private classes in and of themselves. They're that popular, and they're that, I would say, consistent. The first one is STEPS. It's an abbreviation for short-term entry point. So let's say the oscillator gives a setup telling you that there's going to be a directional change. Well, you can use this tool to help you determine where to enter. Now, once you've entered with this high probability entry point, well, you say to yourself, well, gosh, I don't know how to protect myself. This brings in bonus number 3, our PTS Dynamic Stop course, okay? What this does is auto-generate stops on our platform that have high probability for either keeping you in a trade or getting you out before the trend changes. These are 2 great extra bonuses that will increase your odds for consistency just by simply applying them with the oscillator. Let me share with you an example here. Let's look at this example in Apple, all right? Now, here is a daily chart of Apple. As we can see, Apple had been going straight up in a nice direction. Right here, the Primo Oscillator, using that same technique, went below and closed below the lower threshold, okay, right there. So what's that telling you? That there most likely is going to be a trend direction change. Now, even though we hadn't been going down that much, the last bar had been down, telling you that, well, there's a good odds that it's going to go up. But let's say you're still on the fence. You don't really know which direction it's going to go in, because for the last week it's been going up and maybe it's going to go down. So here's where STEPS can help you. Simply on our platform, come to the upper green strategy tab and click on STEPS. And it will automatically generate these high probability entry points. So once price started to go up, you say to yourself, well, gosh, now where do I get in? Maybe it's going to be going higher. Look at all these points where you could have entered, telling you that most likely it's going to be going higher. And this is automatically generated on the platform. Now, let's say you took one of these signals and you say to yourself, wow, I've got a nice profit here. How do I protect myself? Well, simply come up to the platform here once again, click on Dynamic Stop, because that's part of the extra bonus. And these will auto-generate high probability stop levels right here. So as you can see, as the stock continues to go higher, it generated these and kept you in the trade if you wanted to stay in that long. So these are also included within the Primo Oscillator course to help you make your own decisions while trading, okay? This is unlike any oscillator you've ever traded before. We want you to be one of the first to trade with this oscillator, okay? Now, here's the early launch special price. Normally with early launches, we charge roughly for features and for tools of this caliber, roughly close to $5,000, okay? We're gonna drop that price, and what we're gonna do is have you save $500. We're dropping it down to $44.95. Now, if that price is still too difficult for you to come up with, don't worry. Pro Trader Strategies has said that they will have trading plans available. So for a small deposit, you can still be up and running. You don't have to come up with $44.95 if you don't have it. You can still be up and running for a small deposit and establish a monthly payment plan. Now, whichever way you decide to do it, if you pay price in full or if you establish a small monthly payment plan, you're still going to get the other bonuses. All right, you're going to get 12 months of the PTS Primo platform absolutely free. You're also going to get the steps course and the dynamic stop course thrown in. All right. Now, if you're still not convinced, I want to show you how the Primo Oscillator could have helped your trading just days ago. These are things that happened within the last week or two, some within the last few days. For example, this was announced at the end of November, just less than 2 weeks ago. Okay, the S&P 500 ends a 3-day losing streak. Great news, right? The stock saw broad gains Wednesday after the Federal Reserve Chair Jerome Powell confirmed that the central bank will slow the pace of its aggressive rate hiking campaign that has weighed on the market. Okay, so the industrials, Dow Jones Industrials closed up over 700 points. The S&P added about 3%. So this is great news. Unfortunately, this is the way most traders trade. They'll see this news and say, hey, the market looks like it's going to go back up. I'm going to buy after the trading day has closed up 700 points. So let's look at the chart. This was the day that it went up 700 points. Look what happened after that. Had you bought the way most traders will, seeing that good news, they say, well, Steve, that's good news. I guess I should buy, right? This is the way most traders trade. This is why you fail, because you're following someone else or some other information. But another technique, which I didn't go over today, actually generated a short-term trend directional change right here on this day, on the 28th of November. This corresponding bar, that generated a directional change, and most likely you would have bought right there. And you could have taken advantage 2 days later of the big price trend change to the upside, where you could have potentially made over 700 points in the Dow. Now, look what happened after that. Remember the technique I shared with you today? Here's the oscillator. It closed above the upper threshold on that day. The market was up 700. Remember, most students would say, hey, we're up 700. I'm going to buy because that's good news, right? But the oscillator was telling you, you know, we've had a nice short-term trend direction to the upside, but this looks like it's going to change. I would either exit or move your stop up to help you make your decision. And then we all know what happened after that, okay? You could have sold and taken advantage of this big move. So this is how the oscillator can really, really help you make your own trading decisions, help you get on board, and really help you just feel confident about what you're doing. Now, I'm going to toggle over real quickly over here to another chart on our platform. Just want to make sure everyone can see this. It's not queued up right, but let me just share with you. Okay, right here. Excuse me, can everyone see this okay? I just want to make sure you're all seeing this. I'm just putting it in sync with what the market is doing. If you can see this, can you just go to your chat box or question and answer box and just say yes, because usually I don't toggle onto a real live course. No, you can't see it. Okay. One is saying no, and the other one is saying yes. Oh, still on the spiders. Okay, let me do this and let me see now. Can you see this now? It should say the QQQs there, okay? Is that available now? No QQQs, huh? Wow, I'm very sorry. As I said, I don't usually do it. It's still on the spiders, right? Well, let me just share with you what I'm seeing here. On a short-term chart, a 15-minute chart, the spiders actually gave a sell signal in the middle of yesterday, okay? Not a sell signal, but a short-term directional change in the middle of yesterday. So if you all recall, when the market was actually going higher, or I should say lower, when it was falling out of bed, we all saw that the market all of a sudden continued to go lower. And this was after a short-term signal was set up using what I shared with you today. So anyway, I'm sorry that you aren't able to see that. Let me just go back to this real quickly. So if you can see this, just let me know if you can see this special Primo Oscillator trading class, if that's available on there, because I want to talk about this next. This is what's going to be for the traders that are joining, okay? What we usually do is we have a new tool like this, and we ship it out to you in terms of online and set it up for you via the platform. And then you have correspondence with myself. What we're going to do with this is something special. I'm going to have a private class for a select few people that have already joined, and I'll go over these 4 simple but really powerful ways in which to apply the oscillator. And I'll tell you how simple it is to use this in this private class. Will you be able to ask me questions just the way over the Zoom, the way we are right now? So this is something that's only for a select few. We're going to close the class after that. And so, sure, if people, like sometime next year want to become a student of the oscillator, you can still purchase it, but you won't be have access to the special class we're having or ask me any questions that we went over in class or really understand those different ways in which to apply it. So this is a great way to get heads-on learning, one-on-one with yours truly, and to learn these specific ways in which to trade it while we're looking at charts together, okay? So this is going to be happening most likely within the next 2 to 3 weeks. We're either going to have it at the very end of the year or the first year, depending on how many people sign up. So if you're really interested and want to take part in this VIP class, sign up for this great offer, okay? This is really something that we don't usually do. We don't throw in 2 great bonuses, extra bonuses like we did with the different courses, and we don't usually have a special class teaching you how to actually apply this. So for more information on signing up for this or establishing a payment plan or just any other questions concerning the Primo oscillator in terms of data or in terms of actual application on your chart or the platform, contact Pro Trader Strategies. They developed the oscillator with me. They're in charge of all the pricing and all the discounts and the payment plans. I would highly recommend giving them a call at area code 310-598-6677. They can establish a payment plan, or if you like, they can take your order right over the phone, but there's absolutely no obligation. They're there to help you and to work with you. If you have any questions about data, about the platform, about tech support, about pricing, they're the ones to contact, okay? I'll leave this information right up here. And I promised you I would answer any questions. We have about another 10 minutes left. So if you have any questions concerning what I just went over today about the class, please do not hesitate. Go to the question and answer box or go to the chat box. I believe there was a question earlier. Let me toggle back here. It says, let's see. Someone is asking, I don't want to answer this question right now. It's coming from a person who actually already purchased it, and they're asking more of a tech support question about looking at the window. I would contact Pro Trader Strategies because I just don't want to give away a lot of information. This is a great student of ours, and I don't want to give away their information on this. So I could answer it, but maybe if you contact Pro Trader Strategies, they can help you in private, okay? This is just something that I just don't want to give away too much information to people that are already are thinking about becoming a student, okay? So I hope that doesn't turn into an inconvenience for you. Yeah, that's the question, mainly what it is. But don't worry, they will answer it for you. And if you want, they will refer you to me and I will answer it for you, okay? So I'll send you back a private email, all right? Someone's asking about intraday trading. Yes, you can apply this to intraday trading. And in fact, I was going to try and show you that example of intraday trading. Unfortunately, we don't get the best results because of what happens when you go to a smaller time frame. When you go to a smaller time frame, there's what we call a lot more noise. Right? There's a lot more up and back filling, going up and going down. Now, if there's a really strong move in the market where it goes straight up or straight down, sure, you won't get that noise with any technique you trade. But oftentimes intraday, you got stocks go up or the market goes up, goes back down, goes back up, back down, and you get this whipsaw. So you will find that from time to time. I have seen personally the best results are on higher time frames, anywhere from a daily to a weekly. Even if you want to go smaller, I'd say from a 30-minute time frame higher, but no less than a 30 or 15-minute. Okay, I wouldn't try this on a 5-minute time frame or a 1 minute. And I'll show you examples of this in the course. But I personally find the best results on a daily chart. That's where I really see it really working well, or you won't get whipsawed. Okay, and a lot of ways to use it, and I'll be going over those in the course with you. So if you're a day trader, sure, you can use it, but once again, we would wait for these big moves, and that's where it really comes in handy. All right, good question. I missed this. When does the class start again? Well, we haven't fixed a set date. Most likely it'll be in the next 2 to 3 weeks because we'll stop giving webinars and we'll just close up the class. And you can still purchase, like next year you'll purchase the oscillator, but you'll just purchase it and that'll be it. But now you're going to get these extra bonuses, and you're also going to get this free class where I'll teach. It'll be one day, we haven't decided yet. Could be on a Friday after the market close, or it could be on a weekend, whichever is best for all the students. It'll be a small, intimate class, and then we'll teach you exactly the different ways in which to apply it. Okay. Okay, remember, if you have questions after we've concluded concerning pricing, concerning a payment plan, or the tech support question, the way this one question a student asked earlier, please contact Pro Trader Strategies at 310-598-6677, and they can really help you, okay? They can answer your question personally, or they can forward it to me and I'll answer it for them, okay? Now, as we take one last look at our disclaimer, I really thank you for taking time out of your Wednesday. I know you could be trading or going to other webinars if you'd like, but please, I really feel that this is a great tool that can help you make your own trading decisions. It can really help you with your own trading. So therefore, I hope you learned something, but most especially, I look forward to you all becoming students of mine in the Primo Oscillator course. Thank you so much for attending. I hope to see you in class. Bye-bye.